Welcome to Explain the Charts, where we break down the complex world of trading, one chart at a time. Today, we're taking a look at the USDJPY, the US dollar against the Japanese yen, to see if we can find some actionable insights. Recent Google searches show a lot of interest in this pair, with articles discussing the recent strength of the yen and the potential for a break below a key support level in the USDJPY. Let's start with the daily chart and look at the big picture. We see a slow but steady climb in the USDJPY from 2023 into 2024. This trend seems to have been driven by the Bank of Japan's BOJ monetary policy as they've moved away from their ultra-loose stance with the recent rate hike in 2024. A major reversal occurred around May 2023 when the yen began to strengthen significantly, causing the USDJPY to retrace its previous gains. Looking at the daily chart, we notice a potential resistance level around 144, which has been tested multiple times over the past few months. This resistance level suggests that the US dollar may struggle to gain traction against the yen in the near term. However, the USDJPY found support around the 142.5 level in recent weeks, which may be a good point to consider for a long entry if it holds. Let's zoom in a little and examine the 1-hour chart, specifically the last 2 weeks of August and September 4th. Here, we can see a tight range between 144 and 146. We see some strong bearish pressure, and the USDJPY dropped below the 144 resistance on September 4th. This is a key area to watch for a potential breakout to the downside. If the USDJPY can break below the 144 level decisively, it could indicate a continuation of the downtrend. Shifting to the 15-minute chart, we can get a closer look at the price action over the past few days. Here, we notice a distinct pattern of lower highs and lower lows, suggesting that the overall trend is bearish in the short term. We can see the recent selling pressure in action as the USDJPY struggled to gain momentum and break above the 143.5 level. The price action on the 15-minute chart seems to be in line with the news and the broader market sentiment. For example, the USDJPY fell sharply on September 3rd, following the mixed U.S. jobs report. This suggests that market participants are becoming increasingly concerned about the U.S. economy, which is putting pressure on the U.S. dollar. Overall, the USDJPY appears to be in a bearish trend, with the recent breakdown below the 144 level on the 1-hour chart signaling potential further downside. The 15-minute chart shows short-term bearish pressure with lower highs and lower lows. However, it's important to remember that this is a volatile market and the situation can change quickly. It's crucial to consider all the factors, including news events, technical indicators, and market sentiment, when making your trading decisions. If you're looking to go long on USDJPY, consider waiting for a clear breakout above the 144 level and a confirmed shift in the short-term trend. For short positions, keep an eye on the 142.5 level as potential support. If this level breaks, it could signal a continuation of the bearish trend, potentially leading to a test of the 140 level. Let's summarize the key price levels to keep an eye on. The 144 level remains a critical resistance level for the USDJPY, and a break below this level could signal further downside. The 142.5 level provides potential support, and a break below it could suggest a continuation of the downtrend. The 140 level is another key level to consider if the downtrend continues. Keep an eye on the news and economic data releases, as they can significantly impact the USDJPY. For example, the US CPI report, due on Wednesday, could cause volatility. Pay attention to the Bank of Japan's BOJ monetary policy statements, as they can also influence the yen's strength.